Just heard it, the governor and the MPC, rather the entire team, they're increasing the interest rate for this quarter by 0.75 basis points. Really wasn't expecting that. Most economists and analysts were looking at a 50 basis points, but this is where we are at the moment. We've actually going to discuss this now with an economist who's standing by, Sanisha. Thank you very much for joining us this afternoon. Were you expecting it to be increased by that much?
So we weren't looking for a 75 basis point increment going into this meeting. We had anticipated a 50 basis point increase, and that was really on the back of where our inflation projections were heading and what we had anticipated in terms of growth for the remainder of the year. I think what spooked the South African Reserve Bank is indeed the inflation expectations. The Bureau of Economic Research's inflation expectation survey was also released this afternoon, and we saw that the longer dated inflation expectations, which is what the market is expecting in 5 years' time, those ratcheted higher to 5.6% from a previous number of around 5%. So that was quite a significant increase. And we know that the South African Reserve Bank wants to rein in those inflation expectations.
Boy, are they reining them in. I mean, what does this all mean then, Sanisha, for a consumer or just an ordinary South African sitting watching that announcement this afternoon, 0.75 basis points higher? What exactly does that mean?
Unfortunately, it's not great news for the consumer, because that means that anything that is linked to the prime interest rate, your mortgage loan, your vehicle finance, is going to increase with this latest 75 basis point increase in interest rates. But do remember that the reason that the South African Reserve Bank is in place is to protect price stability in the economy and to maintain purchasing power for consumers. Without interest rate increases, we could see inflation running away to even higher levels. And as we know, in the South African context, high inflation always hits your lower income households more disproportionately.
So when we look at his commentary on the inflation outlook, I mean, this is one of the reasons we are where we are now. He is saying that it is set to remain above the target band until perhaps the first quarter of this year. And really, I don't know if there's anything that, apart from the SARB's intervention, that could perhaps stabilize the inflation. He did say the risks remain, and those include the food and fuel prices. What did you make on his projections in terms of what inflation is set to look like?
So I think we should read a bit more into what they call core inflation, which is underlying inflation. When we look at headline inflation, it also contains the food and fuel shocks, which are largely external in nature and not much that we can do about it as the South African economy. However, the underlying or core measures of inflation is where we should focus our energy. And I think this is why the South African Reserve Bank wanted to raise interest rates by a bigger increment than what the market was expecting today. And that was because their expectation on underlying inflation is looking to be much higher than what the market consensus is. If we look at that underlying inflation, which again is excluding the food and fuel price pressures, this tells us that on average next year, the SARB expects that line of inflation to average at 5.6% and 4.9% in the year after that. So that's still quite a way away from the midpoint of the 3 to 6% target range.
Let's speak a little bit about the GDP forecast that the SARB has revised upwards, surprisingly, but also juxtapose it to the fact that they do say that the consumer spending or activity within the economy is going to soften in the coming year.
Well, the nice upside surprise that we saw in the first quarter of the year was predominantly the cause of the upward revision for the full year growth estimate from 1.7 to 2%. So that's getting closer in line to the consensus expectation, which is currently sitting at 2.2% for this year. Going into next year and the year after that, the SARB seems to be a little bit more bearish on the growth outlook. They have a more negative stance on growth going forward. This is presumably in terms of more pressure coming through for the consumer's pocket, including, of course, higher interest rates, but also a very benign employment outlook in South Africa.
Yeah, and he also did say he broke it down into, instead of just focusing on annual growth, Sanisha, he did break down the next quarters that are coming in terms of economic growth. That's not looking too great. And he did mention the KZN floods and the blackouts that Eskom has instituted in South Africa as some of the major contributors to the lower quarterly growth.
Quite correctly, and I think that shouldn't really come to us as much of a shock. I think we knew that the momentum in GDP growth had softened quite significantly going into the second quarter of the year. The increased incidence of load shedding has put many businesses out of operation for those hours where there were power outages. And we know that the severe flood damage that occurred in KwaZulu-Natal did have some negative repercussions for the transportation sector, for the agricultural sector, and those are likely to bear quite negatively on growth. Again, I think it's quite important to be a bit more forward-looking, and it's quite nice to have the estimates on the third and fourth quarter just as an indication of how far they see the economy rebounding in the second half of the year.
And then based on everything that we've just discussed and the points that were put on the table by the governor this afternoon, Sanisha, do you think that we might see an ending to the cycle anytime soon, perhaps by the end of 2023, or is this set to continue for a while?
At the moment, we are anticipating the peak in the interest rate hiking cycle in the first quarter of 2023. I think for as long as inflation continues to surge in the global market, we will continue to see global central banks with more aggressive interest rate hiking stances, and that is likely to filter through into our own local market. We've seen, more risk coming through from the currency, which has depreciated quite sharply against the dollar more recently, and that has been on the back of the dollar acting as a safe haven bet, as investors are now starting to get quite worried about the potential for a recession on the global front. We've continued to see relatively high oil prices, and the fact that food inflation in South Africa has continued to pick up. I think the risk here is that inflation is more persistent and becomes more entrenched in the economy on an underlying basis. And I think that the Reserve Bank will continue to set their tone at quite a hawkish stance in order to rein in these inflation expectations, which now have started to become a little bit more de-anchored than what we had seen in previous months.
Thank you very much for those insights, Sanisha Pakrasamy, joining us. She's an economist at Momentum, speaking to us about what you see there, the breaking news this hour. The SARB has decided to increase the repurchase rate by 0.75 percentage points, and now we are sitting at a repo rate of 5.5%.